With the year 2025 slowly but surely coming to an end, we're now in the final quarter of the year, a year which has been really good for the markets overall, right? Pretty much most of our investments, I'm sure if you're watching, should be in the green. The question is how well it could have been doing. And that's why in this video, I want to go through some of the biggest, most popular asset classes from stocks, ETFs, cryptocurrencies, gold, etc. and see which of those actually performed the best until today. And of course, this is not investment advice. It's just for you to get an idea and see how different investments have been performing this year. Right, and for that, I'm going to jump over to TradingView, which is really easy to use platform and chart where you can plot different chart lines of different assets and kind of see over here on the right the percentage returns. And I'm going to change it to year to date. Now, at the end of the video, I'm also going to change it to 5-year performance just to give you a longer time horizon because I am personally a long-term investor. While a couple of months are obviously important, in the grand scheme of things, if you invest for 10, 20, 30 years or more, 1 year doesn't really make or break your portfolio, but it's still always interesting to look at it. Now, let's kick things off with what is for me the market. When I say the market, returns, right? Often people, myself included, return to the S&P 500. That's why I selected over here S&P 500 ETF, SPY. Right, so year to date, the S&P 500 returned a staggering 14.22%. Now I know for some of you younger people watching, that might sound boring, but actually 14% is absolutely unbelievable considering that you're well diversified in a way, right? You're investing into the 500 biggest companies in the US, which historically returned anywhere from 8 to 9, maybe 10%. 14% before the end of the year even is actually really amazing results, which if the year was to end on that, I would be extremely happy with those returns. So that is the market. And let's see how other assets and investments compare to that. Now, another very popular ETF that people invest in, if they don't invest in the S&P 500 because they say it's too concentrated, then they go for something like an all-world ETF. In this case, the Vanguard FTSE All-World ETF is a very popular one, VWCE, especially for European investors. And here it returned a slightly lower return of 5.09%. Those returns are only the actual price returns, right? Some of those investments I'm showing you, for example, some dividend stocks we're going to cover in a moment, they do pay dividend, right? So keep that in mind. Obviously, the dividend would be on top of the price return, given the strong performance of some of the top companies inside the S&P, right? All those tech stocks, AI stocks, etc. They have been really lifting up the overall S&P, which you may have less exposure to if you were to invest in an all-world ETF. At the same time, you're going to be more diversified across different countries, not just focused on the US. But talking about tech, let's add also to the mix a very tech-heavy ETF, which is the Nasdaq 100. So here, much more focused on tech inside the Nasdaq, all those listed companies over there. And yeah, obviously, tech has done very well this year, and it outperformed the S&P and the all-world ETF with a return of 18.61% year to date, which is obviously really strong. Now, granted, you will also usually pay a slightly higher fee for having such an ETF, but given the superior returns, that fee is quite negligible actually. So given that I'm also investing in the Nasdaq 100, I'm really happy with those returns, of course. But what about European companies? Being a European myself, let's see how the Eurostoxx 600 did. And actually, surprisingly well, up 12% for the year. We know that Europe in recent times had a resurgence, right? Especially defense sector, many other industries where people sort of wanted to diversify away from the US. They were a little bit scared of having overexposure, all the tariffs and so forth. So a lot of global investors started looking into undervalued European stocks, and some of them have really taken off. Overall, it did actually really well. Now, I'm personally not investing in European stocks. I wish I could. I just don't see too many interesting companies at this stage, unfortunately, but hopefully one day that will change. But at this stage, I'll be sticking to mostly US stocks. Now, talking about US stocks, let's look into some of them, starting off with the biggest company in the world right now, which is actually Nvidia. And you can see it really had a tremendous performance, not only that year, but also previous years. You'll really see that when we zoom out a few years later on, for 5-year period, it performed crazy good. But even that year, still up 30%. Unbelievable performance. And that's obviously one of the reasons why ETFs like the S&P and the Nasdaq 100 performed so well, because those strong tech companies performed extremely well. Another one that did really well is, of course, Google. Especially in the last few weeks, you really saw a major pickup in price after the court ruling was made that Google was to keep their Chrome browser, which was a big, relief, so to say. And that really gave a major boost, even outperforming Nvidia year to date. And being a shareholder myself in Google, I wish I had even more shares, but I'm definitely thankful for the nice share price appreciation. And another holding of mine is Amazon, which is another tech behemoth in the US. Unfortunately, so far, it actually did pretty poorly this year, down 1%. I'm still personally in the plus because I bought at different times. At the same time though, I'm buying Amazon very strategically. I'm quite happy with this because I accumulate more and more positions this year, and I'm hoping to get to 30K very soon in portfolio size of Amazon. because I'm really long-term bullish on it. We've seen so many of the other tech companies taking off, and Amazon so far, I think, didn't have their moment yet. I think that moment will still come where we see a major growth. They're going to be benefiting so much from AI, automation, robots, by saving workforce. Their profits are going to absolutely surge, and I'm going to be really long-term bullish. But for time being, yeah, overall, it really performed the poorest of all the big tech stocks. With this, let's also look into dividend stocks, which is Realty Income. They pay a monthly dividend, so very popular. A lot of dividend investors invest in a company. I used to invest in it myself, which is of course nice to get paid on a monthly basis. And year to date, they actually recovered really nicely. That's a very strong performance, over 40% growth, just in line with the S&P 500. So really stellar performance. But then again, previous years, they have been on a downward trajectory quite a bit. So that's nice to see that they made a comeback. Next up, let's look at the cryptocurrency and see how it performed. But before we do, a quick word from today's sponsor, Snowball Analytics, which also happens to be one of my new favorite portfolio trackers that I personally use. Now, I love investing in different asset classes to diversify from stocks, crypto, ETFs, and more. And for that, I use different stockbrokers, crypto exchanges, and that's actually quite a challenge to manage it all. But there's actually a great solution for it, and that's called Snowball Analytics, which basically allows me to have a glimpse of all my various investments in one nice dashboard and overview. It works on the web and on the mobile, super easy to use. And you can see here, if I click on portfolios, all of a sudden it pulls up all my various portfolios that I do have individually. You can either sync it automatically with those brokers, or you can also do manual import, or just export from the broker your statements and then auto import it into the platform. Super easy to use. And yeah, just absolutely love it. The insights you get over here, your various holdings. And if you enjoy dividend investing, you're going to be in good hands over here. You can see some really good metrics and breakdown of the various dividends you can be expecting, future payouts overall. That's of course always really nice to see how your income grows over time. They even have a dividend calendar, so you can really easily see which day, which month you're going to be receiving which dividends. And the cool thing is you can also very easily compare your performance versus some international benchmarks such as the S&P 500, or you could select some other ones if you wanted to. You can easily change the currency if you wanted to. And yes, you can have it in light mode as well, of course. And if you wanted to see any of your other portfolios, just click the drop down over here and select from any of those, and boom, you'll be in that respective portfolio and see what's going on over there. And I really love the mobile app as well. And best of all, the widgets they have. You can see over here right on the home screen, how my total portfolio is doing. You can see also the upcoming dividend payments if you have any, and you can go inside the app and see many of the similar things I've shown you on the desktop version. You can see over here how your portfolio developed over time, and click the drop down if you wanted to see any of the other portfolios. And since I am using this tool for myself as well, and this channel is all about transparency, I made my entire portfolio public, and you can get access to it and track it in real time. Whenever I make any changes to it, you will see it over there. You find the link down in the description below, enter your email, and I'll shoot you a private link to track my portfolio. And if you do want to check out Snowball Analytics for yourself, you can either scan the QR code on the screen or check the link down in the description below. And if you do use my link or the code KAI, you'll get a 10% discount on your subscription. With this, let's move to cryptocurrency and start with the biggest one in the world, which is of course Bitcoin. And well, unfortunately, it actually really underperformed since the beginning of the year, up only 11%, underperforming even the European stock 600 or S&P 500. So really overall, not the best performance until this very moment. But we know, of course, that cryptocurrencies are very volatile. We see here, we had some new all-time highs this year already, where we were up almost 30% at some stage from the beginning of the year. But then in recent times, it did take a dip once again. So I wouldn't be surprised if by the end of the year, we see another all-time high. But overall, it's been a really good investment for me. And especially when I zoom out later on to a longer time horizon, you see the overall gains have been absolutely incredible. And let's look into the second biggest cryptocurrency. Ethereum has performed pretty much similar to Bitcoin, and usually they move in parallel, right? We see it up 10%, so it moves pretty much in line with Bitcoin. Now with this, let's move on to gold, which has been absolutely surging in recent times, and you see it has been the top performer so far out of all those various asset classes this year, up 54%, absolutely mind-boggling. I'm not a big fan of gold myself. I don't own any gold. I'm not planning to, but I gotta give credit where credit is due. That is an absolute stellar performance. Now, there are many reasons for this. Obviously, people are scared of the devaluation of the dollars. China, BRICS countries really buying gold like crazy, driving up the price because they want to depack from the dollar and the treasuries to be more independent. So many factors. But yeah, there's no denying that gold performed extremely, extremely well. And honestly, it might probably continue to do so. I'm still not really tempted into buying it because, again, there's many different reasons I spoke about in the past why I'm not a big fan of it, but the performance has been absolutely stellar. So if you invest in gold, really well done. But if you happen to have gold teeth, you might want to be careful. It's dangerous these days with such prices out there. Right, with this, let's zoom out to a 5-year period. All of a sudden, you really have different numbers. Realty income up only 2.45%. Most of the gains would have come in the form of dividends. They pay dividends 5-6%, something around this range. So that's definitely not too bad. Now, Amazon, on the other hand, up only 36%. Again, over a 5-year period, quite disappointing. So I would be hoping and also secretly assuming that in the future the gains will be higher. But yeah, over a 5-year period, really not a major gain there. Then we have the Euro Stoxx 600 up almost 60%. Really not too bad. Vanguard FTSE All-World ETF up 88%. Really stellar performance, almost neck to neck with the S&P 500 up 93%. Then we have the Nasdaq 100, once again, even over a longer period, outperforming the S&P because of the strong tech performance. So if you believe in tech, probably that could be a good option for you to invest in. Then we have gold. All of a sudden, a little bit less performance than over a year-to-date period. It just shows you it was a crazy rally in the last few months. But then again, over a 5-year period, even outperforms the S&P. Then we have Google up 208%, more than twice the returns of the S&P 500. So once again, being a Google shareholder, I'm really happy with this. We have Coke up 422%. For me, I must say that was quite surprising. Then we move on to Bitcoin, up 740%. So that's why I'm saying over a longer time period, it definitely outperformed many other asset classes. And then we have Ethereum up even more by 857%. I don't have any Ethereum, but well done if you did. And lastly, of course, we come to the winner. That is clearly Nvidia. Honestly, unbelievable rally it had over the last few years, up 1,226%. Now, I'm not invested in Nvidia, at least not actively. I own it through my ETFs, such as the S&P and the Nasdaq 100, but I'm not actively buying any shares. Those gains definitely contributed to the gains of the other ETFs I mentioned. So yeah, that's always important to put things into perspective for a longer time horizon. Sometimes it gets a little bit misleading when you see on a shorter time horizon how things are doing, but if you zoom out, you see a bit more averaged out returns over time. And when we look over here to the biggest assets in the world by market capitalization, we see gold continuing to build out the lead, now sitting at 28.5 trillion market cap. So that's basically the price of gold times the quantity in the world, right? I mean, that's kind of an estimation. That gives you the market cap of 28.5. Then the second biggest asset in the world right now is Nvidia. Unbelievably high when you think about it, right? 4.3 trillion, which is crazy. One single company. Then we have Microsoft, Apple, and so forth. Then we have over here Bitcoin on the 8th position with 2.1 trillion market cap. Well, there you have it, friends. Hope you find this interesting. For me, definitely a couple of surprises, but just shows you the power of diversification because it's so hard to pick one winner for the next 2, 3, 4, 10, 20 years ahead, right? It really changes over a period. Different market dynamics will be better or worse for different asset classes. And that's why I think it's so important to diversify your assets. I also own some real estate on top of all my various other investments. And I think it really helps me to balance my portfolio better. And that's why I think a tool like Snowball Analytics really is so powerful because it helps you to track it all in one simple dashboard. And if you do have any questions about any of the things I mentioned in today's video, pop them in the comments down below. Happy to hear from you. Next up, check out this video right here. As always, thanks for watching. Stay healthy, get wealthy. See you in the next one. Ciao.